September is here, the month that often sends shivers down the spines of investors and traders alike. Historically, it's the worst month for the stock market. The data doesn't lie. September has a notorious reputation for being a challenging period for stocks. What's coming now that the Fed may cut rates? The anticipation is palpable, and the stakes are high. Get ready, because the markets could get really nervous, the volatility could be unprecedented, and the anxiety is already building up. Let's look at the upcoming data. This data will be crucial in shaping the Fed's decision and the market's reaction. On September 17th, we'll see the results for core retail sales and overall sales. These numbers will give us a glimpse into consumer spending and economic health. Growth is expected at 0.2%, but what if the results disappoint? A lower than expected figure could spell trouble. And the next day, on September 18th, we'll watch building permits, a key indicator of the U.S. economy's health. Building permits are a leading indicator of future construction activity, which is vital for economic growth. But the main event happens on September 18th at 8 p.m. The Fed decides on interest rates. This decision could be a game changer. Right now, the market expects rates to stay at 5.25% to 5.50%. This range has been the status quo, but any deviation could cause ripples. But there are speculations that the Fed might cut by 50 basis points. Such a significant cut would be a bold move. If the Fed actually cuts rates by 50 BP, it can mean one thing: serious concerns about the economy. This could be a signal that the Fed is worried about a potential downturn, and that could trigger panic in the markets. Investors might start selling off in a frenzy, leading to a sharp decline. Historically, September is the worst month for the market. Average losses are significant. The historical data shows a pattern of declines, and this year might be no different. If the Fed cuts rates, it might signal fears of a recession, which could shake the markets. The mere hint of a recession can cause widespread panic. Retail sales are declining, building permits are slowing, the signals aren't great. These indicators suggest that the economy might be slowing down. So, what could happen next? The uncertainty is high, and the market is on edge. If the Fed cuts rates, expect volatility. The market could swing wildly as investors react to the news. Many investors will see this as a sign that the economy is not in good shape. This perception could lead to a lack of confidence and further market declines. If the Fed keeps rates the same, investors might be disappointed as the market expected easing. The lack of action could be seen as a missed opportunity to support the economy, and that could be another reason for a sell-off. Investors might lose faith and start selling off their holdings. Want to keep your portfolio under control and be ready for whatever the Fed does? It's crucial to stay informed and have a strategy in place. Watch the full video, give it a like, and subscribe, because what happens in September could decide the fate of your investments. Be cautious, stay tuned for more updates and expert analysis. What do you think? Will the Fed cut rates? Comment below. Your insights and predictions are valuable, so let us know your thoughts.